know, lots of people, including me, sometimes say that the short squeeze is getting closer and closer, all right? But the whole thing is that closer and closer, what does it mean in terms of timeline? Well, nobody has that answer. That's why I want to cover with you in this video something that 2022 is actually showing in terms of what the market is going, what is happening right now in the market, and that we anticipated back in 2021 that may actually get us even more closer again to the short squeeze. Not that I'm saying that it will actually and eventually happen this year, which might be the case, but again, nobody has that answer. So what am I talking about? I'm talking about what the market did so far this year, because, everything is tumbling. Everything is going down. If you look at the main indexes, especially the NASDAQ, and the NASDAQ being the main composite, the main basket, the main sector where all of these stocks are going down, 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 and down since December 31st. I'm sorry, since January 4th, actually, since the year started. And this analyst is actually talking about it. It's going to take some time for tech stocks to rebound, says Jeffrey's Brent Field. We also have other analysis that are talking about some investors turning cautious on big tech as Fed hikes loom. Here's the thing, folks. When interest rates rise, when the Fed said we're going to change the policy, it means usually that, hey, folks, the party is over, because it's easier to invest in the stock market. It's easier to invest in certain sectors of the market when it's easy money policy. It means you can literally, borrow money either from your brokerage account, your brokerage firm, or you can literally go to the bank and borrow money and use that money and dump it in the stock market. But what happened in 2020 is that most people use that money, and instead of just buying everything and anything, they prefer to go where there is a lot more money to be made, because when you have more risk, you also have more reward, all right? So they invested most of that money into the tech sectors because everybody was working home, so it was easier for those companies and those stocks to actually go higher because, you're buying a laptop, you're working through Zoom, you're chilling on Netflix, etc., etc. It also went up in 2021, but not as much as in 2020. But now that interest rates are increasing, well, the Fed is changing the policy. It means that kind of party is over. And that's why you have lots of investors, including some of the hedge funds that are shorting AMC stock, that are actually dumping those stocks, because it means, well, things are not going to continue to go like they did the last 2 years, all right? Because things are shifting. Things are shifting. If you actually look at what is happening now, people are moving money away from some tech sector, and they're dumping money into some of the stocks, some of the sectors that are mostly going to be pushed forward by this inflation thing: energy, financials, healthcare, etc., etc. Those are the main three. So how does it correlate with AMC stock? Well, the thing is, bunch of these hedge funds, bunch of these, companies that are shorting AMC are usually companies that used to make a lot of money on tech sectors, used to a lot of money on these tech stocks, especially companies like Citadel. Now that these stocks are going down and down and down, it means that they are also shrinking the money. The money is shrinking, but also the performance is shrinking. So it's going to be tough and difficult if they continue to keep in this strategy to attract and maintain existing clients, especially after they kind of prevented them from withdrawing their own money. So we are still very early in 2022, but people are kind of, losing their minds about what's actually going to happen. But the thing is, things are not looking good for those hedge funds. Things are not looking good for those short sellers, because on top of the whole Evergrande situation that I disclosed in the previous video, we also have this whole inflation thing in 2022, and everybody is calling on the market to crash in reaction to that, which nobody really knows, because it's still early to actually decide and know exactly where markets are going to be in 2022. But on top of that, you have all of the retail investors not going anywhere. So if you ask me, it's just a matter of time, and that's why I say that most of these catalysts are just getting us closer and closer, especially now that the share price is really, really low, because this might give the temptation. It might give some ideas to some of these little short sellers in the play, because it's easier for you to get out of your play when you are not losing a ton of money. When the stock was at $72 a share, they were like, man, I'm already losing 80% of my money on my capital on this short bet on AMC. So what do? Let's wait for the price to go down. So it was easier for them to hold then, because nobody wants to sell when they're losing 80% of the money. But when that 80% becomes and shrinks to 10%, 15%, or even 5%, you might say, hey, you know what? I don't want to get caught here. Let me just take my loss, write it off, and get out. Because AMC is a ticking bomb. AMC is a ticking stock kind of thing. Because it might just literally explode anytime. Not necessarily because of, they start covering, but because something kind of triggered them and forced them to actually start covering. And that's what we want to see. That's what we want to see happening. And that's why everything happening in the market, on the market, every event, every info, every news that may potentially indicate that they are hurting, it's a good thing for us. All right. So that's why I'm saying we have all these things already in place, and it's just a matter of time. Now, it's going to make some people, lots of people in this play a lot of money, and that's why I believe they might take some time to actually start making sure that they are allowing the window to let the stock rise, fly, but also to actually, kind of manage this whole thing. But that's going to be the subject for an entire different standalone video. So see you in the next one, folks.